Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, April the 25th, the year 2018. Let's talk trading as the trade turns. A couple traders were asking me about the turn trade, and they're wanting to do some things with it. So as we go through the charts today, we'll take a look at turn trades. And while we're taking a look at turn trades, we will also make sure that when we look at it, we will consider the money and risk management for the trade. Okay, so turn trade. Red candle followed by a green candle. See, this is a turn trade. Any move off the bottom is going to have this pattern, red followed by green. In other words, bear followed by a bull. Otherwise, how can it go up? If you have a bear followed by a bear, it's going down. So anytime you see this pattern, that's an opportunity that price has turned and will be going in that direction. And one thing I like to look for is, I don't have the mid dots on this chart, but maybe somewhere right around here's the midpoint. You can see it tested, reversed, and that's one way to enter a turn trade, or a simple break of either the high or, in this case, the top of the previous candle is where you can enter a turn trade. Or even here, that's a very tiny wick zone, but you could take the wick zone trade saying, hey, it's red, maybe it's opportunity, it's turn. So right here, price went down, started to go up, you can sit in it, then as it comes back, you'd exit out and bank the profit. And I don't think the UJ is going to fill, but anything could happen. It could turn around. And looking at the daily, once again, you see the same pattern right here. Here's that bottom again, red followed by green. And once again, you see it's going down. So you might even put in a rule where if 2 or more candles, 3 or more would be a buzzard reversal, but 2 or more right here, you can see that there's a turn trade opportunity. And once again, breaking out of yesterday's high, simple trade. And here we have it again. And you can see the buy zone. Maybe you got stopped out there. Actually, you shouldn't have, because profit should have been taken here. That should have been the least amount of profit. And then here you don't have an entry because that's red. There you have an entry, and the rest is history. And actually, stop out should have been somewhere here. But you're making all this money, you want more, and then all of a sudden you wind up giving a bunch back. Maybe you stop out here, then you're crying. See, that's why you have to have your exit playbook and execute accordingly. And you see here we're setting up for a nice red rat reversal. Price to come back down. Pivot. It took out the pivot, and now actually you got the weekly R4 number right there. So price has moved up. And we're looking at price action. Once again, turn trade, we've already seen it on the daily, weekly. Look at the hour, same thing is happening. Looking at the 5 lines from yesterday's daily candle, as what do I say every day? Green at the line, profitable. Red at the line, profitable. I mean, it just usually pays off. Now, if you were late to the party here and you tried to go short there, that's on you. I mean, yeah, it's actually, you would have been exiting the wick zone. So, but not every trade is a winner. But looking at these 5 lines right here, that should have been the worst case, which was only about, what, 6 pips? That's not too bad. And here we go, the wick zone. Price doesn't like staying in the wick zone. Maybe I should just put that on the bottom or on the top so I don't have to say it every day. But, you know, repetition is the mother of skill, and that's what we want to do in trading is we want to repeat profitable trading practices. And here we're looking at the holo setup. It just boomed from the beginning. That's previous mid right there, you can see. Came down, hit the previous mid of that candle. Oh, looks like we've got a holo trade on. There you go. And as you can see here, the ask came down through the peak, and now you're good to go for about 3 pips. Real exciting, right? And once you're just using the line chart, looking at the, you can see lots of selling happening here. Oh, now we just switched. And it just switched over to buying. Now once again we're waiting. A lot of indecision here. This is what it is. It's just waiting to determine, does it want to take that break? I mean, you can kind of look at these closes, lower highs, lower lows, look for a break. And I was monkeying around with the RHIRB. See, what would that be called? Call it the RIRB, herb. Now I'll have to give it some funny name, right? RHIRB. Or maybe just the IRBs. It's just that, was it Rob Hoffman invented it, so that's why I put his initials out there, because these aren't TRO IRBs. So it's not my method, but looking at it, employing it, you can see that it can be profitable. You see here all the different trade opportunities you had to go long. We can pull it back even into a M5 chart here. And then scrunch it. You can see there was a opportunity here to take a long, and opportunities here. Now that short didn't play out right there at the 24. But then employing this other one, that would have only been a 2 pip trigger turnaround, and you're in them. And you can see here on M5, there's some dots. I don't have M5 listed. I usually don't use the M5 bars to trigger off of, but the dots just go whatever on the current chart. And to see how I did that for you guys. I loaded up 6. I've got daily, weekly, monthly, H4, H1, and M15. So you can see there's all kind of those bars down there. And let's just switch over to daily. You got the weekly, the monthly. You can switch out to the weekly and see. And right there was a long trigger from that one, which be 142 pips to the good. So I'm kind of liking this concept. It's just one way of entering, picking spots to enter. And actually, let's just take a look and see if there's anything else here. You can see here there was a short opportunity there. It's looking for a long. And maybe pull up the euro. There's a tiny short there on the M15, worth about 4 pick scalp. Okay. Australian US dollar. You can see there was a long opportunity this hour. Up a whopping 3 pips. Okay. You can see you've got trade possibilities happening. So when these lights, when these come either red or green, it's telling you that you have a trade opportunity on the horizon. Looking at here, you see shortened 3 pips. And you can see right here, because of this long wick at this level, it's an IRB. So anyway, I hope I've answered questions. And everybody out there is making pips, making money, because you might be making pennies instead of pips if you're trading stocks, or points if you're trading something else. But just remember, fellow traders, it's not what you trade, it's how you trade it. Let's get out there and drain the banks.